All right, hey, how's it going, guys? So we can now speed this up a little bit, right? We've seen the same thing over and over and over again, stage one, stage two, stage one, stage two, and this was on something I personally traded, and now the camera should be properly working, so you should be able to see me. And again, I want to take you and show you another example that I also personally traded. So again, before looking at the actual entry that I might have taken, where may that entry have been? A lot of you should be able to look and be able to start pinpointing or deciding on areas that would have made sense given a normal stage one and stage two delivery. Let's go over it again. And again, you can kind of start from anywhere because you're using this in tandem with some of the other concepts that you're already learning. So again, we can start kind of from the bottom with what we have here, but here's your stage one, followed by, let's do this and do this. So here's again a stage one followed by a stage two. A stage one, actually I'll just draw it because it's easier that way. Here we go, beautiful. So stage one followed by a stage two. Stage one followed by a stage two. Stage one followed by a stage two, but in this case it becomes kind of this longer term stage one, flushes out, fails down, does whatever this is, and then starts a new move, right? So again, it becomes kind of choppy. It becomes hard to tell what this market's doing, and then all of a sudden it goes into a new longer term stage one, or stage one into two, followed by this stage one into a stage two, followed by maybe a short-term stage one, stage two, kind of short-term stage ones and twos, followed by a longer-term stage one, which now should be followed by likely a stage two. Or, very simply, inside of it, we have the fractals giving us a stage one into a stage two, giving us a stage one into what should now be a stage two, which we can also understand might become a stage one now, which could become the stage two on a smaller level that delivers and allows this stage two of the higher time frame to actually deliver. So once again, this is something I personally traded. And if I take all of these out or I kind of leave them on, it doesn't really matter necessarily how you do it. But if I just do this, there you are. This is another market that I personally traded. This is UTHR on the 65-minute. And once again, you see the exact same things. I kind of drew them in here, and we can even draw this one in right now. And funny enough, the entry I had taken, given the same rules that we've looked at multiple times now, and there are multiple available here based on the moves you're looking for, the entry I personally took was the buy through basically this high right here. And if I go down a little bit, because again, this is anticipating that this is going to start a move, and this is entering through and after a flush out into the formation of these MBs, or a flush out into the formation of this MB, this MB. So honestly, looking back at this, this was the better entry. So an entry here as a buy was a lot better, right? And then this should be profit. However, I entered this a little bit late. This is going to be something we're going to talk about down the line in the portal as to the other moves that are also applicable given the momentum that's present in a market. So I entered actually through in or around these areas here. And if I go down again, just to show you this, so again, same concept as before, where we saw this on Bitcoin, a market in motion or a market in trend tends to remain in trend, right? So back to the initial idea of understanding what the composite operator is likely going to do, one of those confluences is actually studying and understanding what the market has already been doing. A lot of the time, a market that begins to prove that it wants to deliver, that begins to show it wants to deliver, that begins to put in demand or MBs, proving that it wants to deliver, is also a market that tends to reset up and then re-deliver and continue delivering. So it becomes the best possible entry and further opportunity follow-up on a good market, right, as we've seen over and over again. And this is what creates those stage ones and twos. So if we go back down into the example of the personally traded market where you enter here or through here, here is again the aftermath of that same trade. I entered in or around the buy stop of this area. Again, based on where you entered, whether it be through this high, whether it be through this high, you can see as price began to validate those demands, as price began to move higher, and as the trend truly came in, price never returned to anywhere around the MB creations or the demand creations or the entry levels, which is one of the main things that I look for in my trading, then began to put in shorter term MBs as we continued going higher, higher, higher. And again, those stage ones into stage twos became smaller ones into twos, ones into twos, ones into twos, until it started making a larger one into a two, one into a two, 1, and then it failed down. And since then, I've been once again waiting for this to start making a 1 into 2, a 1 into 2, and actually this is kind of live price, but this is what I'm waiting for to re-get positioned again, given the fact that this market is one that has again proven itself to move. So I took an entry. That entry led to a market that proved itself to move, made me money, and now may set up another entry. And if it doesn't, we again come back to the initial understanding that when a market is ready to fail, we let it fail, right? When a market is ready to fail or no longer is present for a potential opportunity, we let it fail. And it doesn't bother us that the market is unwatchable anymore because we understand it's just a worthless market. We simply can step away from it. So again, this is the same example over and over again of the same thing happening. Stage 1 to 2, stage 1 and 2, those are acting as accumulations or reaccumulations. That's where that concept actually comes from. And it's a simplification of some of you might know this as Wyckoff, but you don't need to look it up. You don't need to read about it. You don't need to learn the labels because it's useless. Instead, start thinking in stages. And the stages are followed by flush outs, and those create larger term stage 1s that lead to new stage 2s. And as a result, you get these kind of beautiful moves. Now we're going to speed this up like I promised. And here's another example of something I personally traded, right? Again, stage 1 into 2, stage 1 into 2, stage 1 into 2, stage 1 into a potential 2, over and over and over again. And again, if I asked you where are some of the opportunities based on just what you understand so far that you could have taken, a lot of you may point to likely this flush out followed by MB, MB, flush out, MB, MB, or an MB inside of there, flush out, MB, right? And this could be a potential entry. And funny enough, that's actually what I personally entered. So if I delete this now, and again, this is actually Netflix on the 65 minutes. And what I did this time is I actually found you an example where I actually just took a loss and a break even, or I think both were break evens. I think one was a loss, one was a break even, because what you're going to be learning, as I promised, is not just how to follow a trend or find the trend and be in the trend, but you're also going to learn how to anticipate a trend, understand the trend, get involved, and take your losses with beauty, okay, and with confidence. So again, from this move right here, which was right here, well, actually, initially, I did take this long as well right here. So from this flush out right here, I took the MB right here. So this MB I traded, and you can see that's this one right here. I traded through some of these buy stops here, and I believe on this one, I got stopped out for a loss. Then again, through a flush out or through the overall stage 1, we started to make MBs, which are tradable down here, but they're harder to spot, into new MBs that I personally traded. And as price began to validate MBs higher, as it began to move higher, I moved myself to break even. And as price returned, I simply took a +0 or -0, however you want to view that, on this, and the market ended up failing and going into a potentially bearish market, or very simply, in a bullish scenario where I'm looking for a bullish market, it became a worthless market. So I wanted to include an example here that wasn't just win after delivery, because part of trend trading or part of following the trend or the composite operator is that most of the time, once you get involved, a lot of it is sitting on the sidelines and waiting for things to occur, right? A lot of it is getting involved, getting yourself positioned, getting yourself managed, and getting taken out. And doing that over and over and over again, given that either the stage 1s and 2s are still delivering or that they completely fail and there's nothing left to do, right? And this is a great example of exactly that, where, again, you have stage 1s and 2s delivering. There's an overall acceptance as to where the composite operator likely wants to take the market. You have these new stage 1s that start to create the same moves you've seen now over and over and over again, at least for the starting principle of accumulation, or what we call reaccumulation, where prices move higher, they flush out to start making those longer term stage 1s that become those accumulated orders that start creating new MBs. And those MBs act as entries in the anticipation of a new stage 2 higher. And again, this is a great example of one that I took that became a loss. Here's another example of one that I took that didn't end up doing anything. It just became a break even, because a lot of trades and a lot of actually catching a big trend is going to be taking normal losses and taking break evens. And then when you catch the big trades, when you're in the large trades, you get rewarded for being in those trades. That's simply the way that the market operates and actually makes you money. So there's an example of another winner, as well as 2 back-to-back trades, one that was a loser and one that was a break-even, or also considered a potential loser based on some of your management styles and based on your own metrics. Okay.